Beecroft, the chairman of Saxo Capital Markets UK, senior market analyst. Hello, Nick.
Morning.
The last time we met, not that long ago actually, but a lot seems to have happened, and the year's grinding to a halt. We've had an election in America, so the emphasis is now looking towards the fiscal cliff again, so Congress is the ball's in their court.
Yes.
I mean, how do you see that panning out towards the end of the year? I mean, we've only got until January the 1st and Christmas in between.
Sure. Well, I may come to eat my words, but I'm actually at the sanguine end of analysts, I guess, with regard to the fiscal cliff, because I just feel, look at human nature, the Republicans are completely demoralised by these election results in their entirety. You know, they have lost huge ground and constituencies within effectively the non-white, non-male population, and I think won't have the appetite for a fight, if you like, from a human point of view. And from a strategic point of view, to the extent that they are surely regrouping and looking to the future, they will neither want to be seen as the extreme party that pushes the country over the fiscal cliff's edge. I think they will want to move more to the middle ground generally, and this will be, if you like, possibly the first vestige of that. So I do see a fairly easy resolution without much trouble to the markets by the deadline.
And with the dollar at the moment, there's obviously a bit of weakness there. It's given up quite a lot of the gains it managed to accrue since its October the 17th rally.
Yes.
Is that sort of this risk on with the fiscal cliff, or is it a bit of early profit taking, do you think, before the end of the year?
Risk on. I think possibly the market in general had got itself a little bit long of dollars out of fear of what might happen over the fiscal cliff, because I think you might have seen perhaps paradoxically, a rush to the safe haven of the dollar if the worst events of the fiscal cliff had come to pass. So I think the market got a little bit long. I think there are developments within the Fed that at the margin are probably dovish too. I think we face a very probable move at even the next Fed meeting in December to this, if you like, objective-oriented policy, where they're saying we won't raise rates until unemployment goes, let's say, below 6.5%, unless inflation goes over 3%. And given that's all being propelled and proposed by the doves, Yellen, Evans, Bernanke, I think it's going to look like the possibility of looser policy for longer. So that's possibly weighing on the dollar a little. All in all, I think we're in with the Eurozone, you know, once again being the problem being kicked down the road. Greece apparently getting its tranche of payments. The market's become a bit complacent again, I think.
And interestingly, I was going to come on to Greece. So is Greece sorted? Can we forget about Greece?
I don't think you can say that. I think one, unfortunately, still has to have a concern about the mere collection of taxes. Never mind the rate at which they're meant to be levied and the other matters of spending and fiscal policy. But we've learned, haven't we? You can't underestimate the will of the Eurozone governments and those that matter to keep this thing alive. And for Merkel, I guess we've come to the realisation it's actually not a political challenge, because her competitor parties in next year's election were also pretty pure Euro anyway. So she doesn't face that dilemma of whether to back the Euro because it might have some adverse effect on her re-election. It's a pretty safe bet. And I think the German people have been cajoled into a realisation that they have to cough up, and will continue to do so.
So as the emphasis then moves from Greece, for the time being at least, to Spain, I mean, are we really looking at Madrid having to bite the bullet and seek a bailout?
Yeah, I think we'll probably come to that sometime in the new year. I think the really interesting development there within Spain is going to be the extent to which social unrest and protest gains ground, maybe as the weather hots up and it becomes somewhat more animated and easier to demonstrate. I kid you not. I mean, this must be a factor. You know, if it's close to freezing, it's not much fun on the streets. But all trivialisation apart, that I think will be a key factor as to whether we reach a tipping point where the pain is so much that it becomes untenable for the government to carry on.
Okay, and so this it's an interesting week, not just for Europe but the UK as well. We've got lots of data coming out. Looking at cable, it's back above 160, albeit finding resistance on the 50-day moving average.
Yes.
Are we going to see that gradually retraced, do you think, as the year?
Well, I think a possible, if you like, story brewing in the background is that the government and the Bank of England don't have many policy levers left. The government seems determined to stick to Plan A in terms of austerity. That requires a very loose monetary policy, but the MPC seems to have reached its, how can we put it, extent of it, the extremes of its faith that QE is going to do any good. And we've already heard one or two speeches being made. I think Mervyn King made a speech in which he alluded somewhat obliquely to the fact that sterling depreciating would be another source of impetus to the economy. So I think you may see more jawboning along those lines. Actually, what they could do, though, to get sterling lower is rather difficult. I mean, the extreme would be to help the Fed by, in QE, by the Bank of England buying US governments. And then, of course, they'd have to, they'd have to, sell sterling to buy the dollars to buy those treasuries. I think that's possibly a little extreme. You see, it would be a controversial policy because it would look like a currency debasement plan, which it would be. So it's unlikely the US would agree to it. But I think you certainly see some jawboning.
Very interesting. And whilst we're on the subject of the Bank of England, we're meeting the morning after a Canadian has been appointed to the new governorship. What is your take on that? I mean, is this a continuation of King's stance, do you think?
Well, I think, if anything, Carney is even more dovish, if anything.
Yes.
I think he's had a good crisis, in inverted commas. He seemed to have done that. He moved very swiftly, very decisively as the storm erupted in 2008, possibly more quickly than the Bank of England did. And he is an extraordinarily competent individual, so I think it's a good appointment, probably the best appointment, although I do have great sympathy for Mr. Tucker, because I think he's a brilliant man and is probably unfairly suffering because of the LIBOR scandal.
Yes.
I don't think he did anything wrong. I think everything he did was in the nation's interests, and that may have scuppered his chances, though.
Yes, it would have seemed like a slightly dangerous appointment.
Yes,
it may not
possibly.
turn out to
Could have
be.
come back to haunt the politicians. Yeah, exactly.
Okay, Nick. And finally, there's a recent study by a Brussels-based Lisbon Council think tank, and I'd be interested to hear your take on it, because a lot of market talk has been that the markets have priced in the Greek deal, which is why they're fairly lukewarm about it the morning after with all of the rush. This think tank is saying that the Eurozone is turning into a better balanced, I'm reading it because it's verbatim, potentially more dynamic economy thanks to market pressure and the constant demand for structural reforms, which, whilst painful and at times quite a blunt instrument, have driven labour costs down and helped bring an internal devaluation that has sharpened competitiveness. This seems to be quite a contentious thing to say. Or
I think it is quite contentious, and I think it makes implicit in those comments are a few assumptions. That the fiscal austerity programs get a chance to reach completion without mass unrest in the streets across southern Europe, which I think is debatable. And it also shows a touching faith in the power of the state. You know, this is going to end up with a bigger proportion of the Eurozone economy being, if you like, owned by the state or run by the state. Whereas we, certainly at Saxo Bank, and I would agree with this personally, feel it much better to, if you like, have a clear out of some sorts and let private enterprise in the shape of small and medium enterprises power a resurgence over time, rather than eternally offering more and more liquidity assistance, more and more bailouts. We are pushing the problem down the road, probably.
Yes, so it's more of a business-friendly environment that's passing the ball to ordinary folks.
Yeah, put it this way, it may be becoming a more balanced economy in the Eurozone, but dynamic, I find that difficult to see. Balanced at a lower level of activity with a greater dominance of state enterprises and less entrepreneurial, less dynamic, I would have thought.
Excellent. And so as a summary of where we are in the markets, as I mentioned at the top, that's sort of sputtering to a halt. I think we've had enough of this year, but where do you see things going towards the end of this year in readiness for 2013?
I have a feeling the rest of this year is going to be pretty range bound, and let's face it, these have been difficult markets to trade for most FX participants. Range bound, Euro has, if you like, survived prognoses of its imminent death, and it's been difficult to trade. I think there is some quite big event risks out there, probably geopolitical in nature. The Middle East, especially, I'm afraid it'd be no surprise if we saw an Israeli invasion of Iran. To the extent that the Gaza problem is kept on hold and a truce and talks evolve, maybe that gives Israel more chance to focus on the Iranian problem. And I think if we saw that invasion, depending on its success, the nature of the invasion, or attack I should say probably, attack, the reaction of neighbours, that could lead to quite a lot of dollar strength, based on safe haven flows again. Difficult to trade, but it's worth bearing in mind if you're a dollar bear.
But again, it's a risk on continuation
until that happens one weekend, or one night. So that's a very difficult. Maybe you want to use options to express positions so that you have a limited downside, given that event risk lurking out there.
Okay, thank you very much for your time, and we look forward to our next meeting and see what transpires in the interim.
Indeed.
Thank you very much.